GeoDrill is a drilling services company for the mining industry with operations in West Africa, Egypt, and South America. GeoDrill just released strong Q2 financial results with record quarterly revenues and strong growth in profitability. CEO Dave Harper is here to review the quarter and give us some insight into what the coming quarters could look like. I'm Martin Gagel with Market Radius Research. It's Monday, August the 12th. Please remember, this is neither recommendation nor investment advice. We're here to learn about the company. Dave, great to have you back, especially on the
Good to be
back
back.
of a solid quarter. What's been going on at GeoDrill?
Well, it's nice to be back, and it's nice to be reporting our first in a while solid results. Those that know the company will, would know that we're used to putting out good results, and unfortunately that wasn't the case in 2023. Not to make excuses, but we took some prudent decisions to reposition out of certain jurisdictions for all the right reasons, and that took us a couple of quarters to get that back on track again. And I think today's results were pretty clear indication that we're back to where we ought to be, and that this pretty much signals the beginning of what should be the next phase of growth for the company. So we're really excited, actually. Yeah.
Just not to get too deep into it, but I think you did two strategic things over the last year plus time. You moved out of certain geographic regions, and then you also, your customer focus changed a little bit. Can you just give a quick highlight on what exactly happened there? And obviously changes like that take a little bit of time, which kind of explains the little hiccup you had for the last little while. So what are the two major sort of strategic things that you did recently?
Okay, so firstly, to state the obvious, we had a couple of two or three underwhelming quarters during 2023. This came on the back of a very strong period of growth. We realised that it was time that we needed to look at some of the jurisdictions that we were operating in. One was particularly giving us some concern, and we had to reposition our rigs out of that jurisdiction and reposition them into other markets. The other thing that, if you look at what plagued us through 2023 was the demographic of customer that we had. We were working largely, well, a lot of juniors, and the juniors, as most would appreciate, have had a challenging time with the lack of support from the capital markets, and so we were really challenged with collections, and so we had to swallow some provisions, some non-cash provisions, and so through 2023, this hit two, if not three, of our quarters. Now, what have we done? We have repositioned the rigs out of those challenging jurisdictions. We've changed our customer base such that we're working for tier one cash producing gold mine or gold mines or base metal mines, and they are not beholden to the capital markets. So we're not struggling to get paid. So if you look at our revenue for the quarter, which we've just generated, which we've just reported today, which was in fact a record. Even if it was on par with the previous quarter, it would have been a higher quality quarter because of the less risky jurisdiction where they're operating in, and also the higher quality or the less problematic data that we're dealing with. Do you see my point? And so
you're in easier countries with easier clients. So that's what
we're not spending all our days banging on doors trying to get our bills paid. We do the drilling, we set the clock, and 30 days or whatever whatever the payment terms are, the money arrives. You can set your clock to it, and so we're finding that we're spending a lot less time chasing down funds, and that we can just focus on what we do, and which is drilling, drilling holes, and drilling for profit, hopefully.
Yeah, and maybe not everyone realizes that when like there's a producing mine and they're drilling ahead of what they're to dig out of the ground. And that's kind of essential to what they're doing. They can't just not have the you doing the drilling and because their whole operations are dependent upon it, right?
That's exactly right. As a mining company mines, 100,000 ounces out of its ore reserves, it has to replace them. And so the drilling that we're focusing on at the moment is that replacement
Okay.
resource drilling. And the other part of our business, of course, is discovery drilling. It's exploration drilling, and we just decided that it's time to just back off on that and focus our marketing attention on the cash producing type customers, and that's starting to pay dividends. Which, as I say, we had two or three underwhelming quarters for those reasons, and today's results that we announced were evidence that we're back on track. We've changed
Yeah.
our business model. We've changed our jurisdictions. We're working in safer jurisdictions. Less time spent chasing down funds, and for that, there has. We're expecting to see that there may be some margin compression, but nothing significant. On the other side of the coin, we're just spending less time chasing down funds, so we're not stretched at the bank ourselves. So there's a cost of finance that's attached to chasing money. So if you can have
Yeah.
a higher quality customer that pays you on time, it reflects in lower G&A.
And I would think you can plan your where your drills are going better if you've got long-term contracts with known paying
Mm.
clients that you just keep them there. You get better utilization rates. Maybe they're able to negotiate slightly lower margins, but just the regularity and the consistency and the payment would more than offset that.
Yeah, exactly. Like so, a $40 million revenue quarter, if compared to say a $40 million quarter 2 years ago, is worth more today because it's for a less problematic jurisdiction, less problematic client. Yeah.
All right.
Mm.
Can you talk about your rig utilization rate? How has that been? And then maybe talk about the seasonality of your years as well. You had a solid Q2, a
Mm.
record Q2. Should we expect that to extend out into Q3 and Q4? Historically, Q2's been your strongest quarter. You've got some weather issues to often in the back half of the year and some maintenance that you do. Talk about the seasonality and utilization rates.
Right. So those that know our business would know that quarter two is always our strongest quarter. So that's the benchmark that we always look to. Um, Now, utilization for the quarter peaked at just north of 75%. It averaged around 72% for the quarter. We're very happy with that result. As we speak, we're entering our wet season, and that's common. That happens every year for us. So quarter three tends to take a bit of a break. Utilization comes down to what we would expect to be 60%. It's currently hovering around 61, 62%. And I think we'll maintain that as a standard. We'll flatline at about that until about the end of quarter three. And then it starts to pick up again in quarter four as the rigs come back from the wet season. But then what happens in December is everybody shuts down for Christmas. So the average across the December quarter, as opposed to the September quarter, is usually a little stronger. But our best work is always in quarter two. There
All right.
has been one, I think, exception to that over the years, and that was last year where we had a very solid quarter one, I think it was. I can't remember. I'd have to go back and check. And then
Yeah.
this year we had a soft quarter one. We had a strong quarter two, which was just reported. We're going to have a good quarter three relative to last year. It'll certainly be a year-over-year improver, but it won't be a sequential improver. We're not going to we just shot the
Yeah.
lights out. We're not going to do that again next quarter. Things don't go up in a
Yeah.
straight line. It doesn't work that way. But we will have a solid quarter three and a solid quarter four. All in all, we're going to have a good year.
All right. So Q3 and Q4 will be down from Q2, but up from the prior year's quarter, giving it
Yeah,
broad
yeah, yeah,
parameters.
yeah. No, they should both be year over year improvers. Certainly, quarter three is trending that way at this point in time. Notwithstanding any left, field
Yeah.
exogenous thing that we're not aware of out there, or a market
Yeah.
capitulation or something. But at this point in time, I think it's going to be a solid year. It'll be an improvement year. Yeah.
Excellent. The company's also changed in the last few years where you've got a much bigger geographic footprint, not just West Africa, you're in Egypt, and most recently entering the South American market in Chile and Peru. Could you talk about your sort of other markets and how they're doing?
Yeah. So Egypt's going very well. It continues to go well. We're very, very pleased with Egypt. Another African market that we've just entered is Senegal. We're very pleased with how that's going for us. And again, we were looking for markets to replace the market that we just exited. And, evidently we've, been successful in doing that. So Senegal, um, Ivory Coast, Ghana, and we're still in Mali at this point in time. Uh, but it's a small market for us and it's reducing all the time. Egypt continues to go very well for us. South America for us was not a gold play. We're already drilling for plenty of gold in West Africa. It was once called the Gold Coast. For good reason. There's plenty of gold there. So that's our gold play. In South America, the attraction to South America was tier one miners, and base metal commodity type drilling or EV, the whole sort of EV commodity thing. We didn't go to South America chasing gold targets. It wouldn't make sense. We're already drilling for plenty of gold in Africa. So that market continues to impress, and we continue to gather momentum. It's still early days. We've only been in South America for, I think, 3 years now. But we're very pleased with our progress and picking up new contracts all the time, and keeping our customers satisfied. That's been the key to this business since day one. We've never really lost a customer in 26 years of operations. I can't think of a customer that we've lost tenders, of course, that happens. But in terms of customers, we're still basically just working for the same people that we were working for 26 years ago. And we've just continued to add customers all the time. It's a customer-driven business, so keep the customer satisfied.
Yeah, yeah. Roughly,
Yeah.
how many drills do you have operating in South America now? Because it's only 3 years old. I think you start off with just one or two, and
Yeah.
you conservatively add as you need those
Mm.
rigs.
So we're currently at 8 rigs.
Okay.
Yeah, we got two up there in Peru. Three, actually. Sorry, just added one. And we got 5 down in Chile at the moment. We're just about to add a couple more rigs, actually.
Okay.
Yeah, so that rig number just keeps growing. We've broken through the 90 barrier. What's the next step? I guess 100 rigs, is in the foreseeable future. And the interesting thing here is that those rigs have all been financed from cash generated from operations ever since the beginning of it. Go back to inception 26 years ago. One rig, one contract. Here we are today. It's actually been one of the greatest organic growth stories, I would say, in the history of mineral drilling, I think.
With South America, it's south of the equator, so it's their winter time now, and very different
Mm.
weather, and a lot is different in South Africa or in South America compared to West and North Africa. Does that has that affected your results at all? That they're in the winter time, that you're coming into their
Mm.
spring and summer, and does it offset sort of the African rainy season?
Well, it's actually a really good question because at the moment, we don't have any rigs working in South America. So the results that you're looking at today completely absorb the fact that we've actually had a loss-making division for this current quarter. Sorry, for the quarter just reported. And I think you know, I think that you can then see that when that division kicks in post the well, we call it the snow season. I'm not sure what they really call it, but it snows and we can't drill up in the very high altitude, 4,500 meters. You just can't get around, and that starts to dissipate around the end of September when we start drilling again. So it bolsters our quarter four. And then we continue through the Christmas period, usually take a short break, continue shortly thereafter, and make the most of the season before it starts to snow again in around the end of May. Not all work in South America is in this high altitude, so obviously we're marketing and bidding work in other places of South America that would enable us to continue operating around the 365-day clock. And if we are successful in doing that, then that completely changes things. We go from being loss making through the snow season to profit making. Yeah.
Dave, and how about a future dividend? What is the outlook on that?
I'd like to reinstitute the dividend, and that is a priority. But we do have some competing priorities at the moment. We've just gone through a period of growth. We've added some rigs and taken on some debt. We're doing a good job of, dealing and reducing that debt. But we want to just get see a little bit more strength in the balance sheet. And once we're comfortable with that, we'll be certainly looking to reinstitute dividends. Yeah.
I think we've hit the high notes of the quarter. We hit the major topics there. Is there anything we missed or anything you want to highlight before we wrap this up?
To have actually come through such a business change and to get, of course, we suffered a couple of less than normal quarters for us. We're back. That's now in the rear vision mirror, and all we got to look forward to is, what should now be the next phase of growth for the company. So we're really excited.
Well, and you've been, through your growth, you've been diversifying lots of things. You've been diversifying your geographic base, your commodity exposure, the types of clients you're working with. So if any impact of another country gets dangerous, it should have a lesser impact on you since there's more revenue coming from other markets. So it's
absolutely. As a $140 million revenue company today, those revenues are worth much more, in terms of valuation, or should be worth more than in terms of valuation, than the company of yesterday, because we've just completely changed the way we do things in terms of jurisdiction safety, in terms of payment security, and from here it's as I say, we're back, and we're really excited. We just look forward to the future.
Dave, thank you. That was a great update. Congratulations on the solid quarter. Looking forward to seeing the progress. And thank you very much. Have a great day and talk to you again soon.
Thank you. Thank you, Martin. Thank you.